So let's find out where Gary Jenkins is pitching his tent, because he's the head of credit research for Evolution Securities. Good to see you, Gary. I want to start by asking you about what we've seen in the markets recently, borrowing costs hitting record highs on international money markets. What is fueling this?
Well, there's a number of different things. First of all, Ireland came out and said they couldn't really put an end figure on the bank bailout, and that started the markets looking again at Ireland. And then, of course, it's basically all been about Germany and the rest of the EU saying that actually they're not too sure exactly how bailouts are going to be put in place in the future. So they put the Stability Fund in place in May to bail out Greece. It was put together over a weekend. Now they don't like it. It's not suitable. And there's a lot of confusion about exactly what kind of safety net there's going to be in place for the likes of Ireland. And that's causing real problems for bondholders.
Why the confusion?
Because we're not really sure from a bondholder's perspective where they're going to stand. Do they have to take a haircut if Ireland needs money from the EU? Does it mean that debt gets extended? Is everything the same? No one really knows. They haven't decided exactly what the structure of the debt crisis mechanism is going to be, and until bondholders can see exactly what it is, you can't really price the bonds very well.
What about this €15 billion austerity package? Where do you stand on this? Is it going to be enough to balance the books?
Probably not. It's going to be very difficult to implement. There's obviously political problems in Ireland as well. I think that we're really looking at a situation where they're going to need cash from somewhere sometime next year, which is probably going to not come from the market. I'd imagine they're going to need to get cash from somewhere else. If they can get that liquidity, obviously it gives them time, but I doubt that the market's going to be prepared to fund them.
So you're saying that an EU-IMF rescue package at this point looking inevitable?
It looks the most likely outcome.
Would you buy into Irish government bonds right now?
Personally, with my own money, no.
And will investors' confidence in Ireland grow before the government needs to issue new bonds for sale? There have been conflicting views on that.
Well, this is the interesting thing. They do have some time. This is not like Greece back in the 1st of May of this year. They do actually have some time. They also have a bit of a backup. They've got the Pension Reserve Fund. They could technically use that to buy their own bonds as well. So they could actually get pretty much through most of next year. And clearly, if you've got that time, then you can convince the market that things are improving. If you can show that growth is there, if you can show that the cuts are actually coming in, then that little bit of time could definitely help them.
So there is some time to possibly turn things around to convince investors or inspire them with more confidence. But at this point, does it look like investors are going to continue to dump Irish government bonds?
Well, it's very difficult to see many people coming in buying them at this stage. There's just too many uncertainties. And if we look at what happened to the likes of Greece, you saw what prices did there. Then at the moment, whilst yields are very high, they're not Greek-like, and yet this could be a Greece-like situation.
Gary Jenkins, head of credit research at Evolution Securities. Thanks so much.